Ladies and gentlemen, good day, and welcome to Chatha Foods Limited half year and financial year ended 2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Priyanka Oberoi, Company Secretary and Compliance Officer. Thank you, and over to you, ma'am.
Thank you, Nirav. Welcome to all our participants around the world. It's a pleasure to welcome you all to the half year and the year ended 2024 financial result conference call. From the management team, we have with us Mr. Paramjit Singh Chatha, Chairman and Managing Director, Mr. Kulbir Walia, Chief Accounts Officer, and Mr. Vishal Singh, Chief Financial Officer. We will begin the call with a brief opening remarks from the management team, and then we will open the floor for the question and answer session. I would now like to request Mr. Vishal Singh, CFO of the company, their perspective on the performance of the company. Thanks, and over to you, Vishal.
Thank you, Priyanka. Good afternoon, everyone. I'm pleased to present you the financial performance of the company for the year ended 31st March 2024. Our balance sheet position has improved and shows total assets reaching 83.51 crores, comprising of 52.04 crores of current assets and 31.46 crores of non-current assets, and total liabilities of 83.51 crores, comprising of shareholder funds of 57.76 crores and 25.74 crores of current and non-current liabilities. We have improved on our current ratio, and it is currently at 2.6 times. Our debt equity ratio has also improved to 0.4 times in the current financial year against 0.49 times in the last financial year. Our ROE and ROC has also improved to 21.02% and 14.30% simultaneously against 11.95% and 13.43% in the last financial year. In our profitability, our total revenue for the period was 133.83 crores with a contribution of 90% from the non-vegetarian products and remaining 10% from the vegetarian and plant-based products. So our revenue has increased by almost 12% as compared to the last financial year, and the growth was primarily driven by an increase in the value chain from the existing customer as well as addition of the new customers. The operating expenses for this period were at 121.62 crores, and the operating profit margin stood at 12.21 crores, which is 9.2%, and it is an increase of 72.25% over last year's operating profit, which was 7.09 crores. And the contributing factors for this increase were, one, the supply chain disruption in raw material and packaging material over the last few years have settled down, and we were able to source RM and PM at better prices. Second, the introduction of new customers and products at better terms. And third was the increase in revenue has also helped us to get the benefit of economies of scale, contributing to the better profits of the company. So for this period, our net profit was 6.16 crores, representing an increase of almost 150% from the past financial year. And our cash flows from the operations for this period were 12.18 crores, and the cash generated from operating activities post working capital changes and taxes was 3.51 crores. Our cash flow from investing activities was 24.61 crores. It comprises capital expenditure of 1.63 crores and directed towards purchase of machinery for the support of existing business and introduction of new products. And second, bank deposit of 23.01 crores and interest received of 3.27 crores. And our cash flow from financing activities were 26.06 crores, which comprises of 33.39 crores of proceeds from the IPO and payment of 7.33 crores towards our borrowings and share issue expenses. So our cash and cash equivalent for this period was 5.05 crores. Thank you. That's all on the financial performance of the company from my side. So we can move to the question and answer session.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Gaurav from Excellence Research. Please go ahead.
Hello, sir. Am I audible?
Yes,
you're audible, Gaurav.
Yeah. Thank you for the opportunity. So my first question is, what would be the maximum annual capacity of the new veg plant? And given the land that is available, what would be the maximum possible capacity in that area if you see large demand? Also, the non-veg unit, your veg unit is moving to the new capacity. So the non-veg unit will also have a larger capacity. So over there also, what would be the maximum capacity? So if you could just explain that.
Gaurav, thank you for the question. And the veg unit capacity, the maximum capacity as of now, what is designed on the new land we have, which is around 4 acres. So we are looking at a capacity of 14 to 15,000 metric tons annual at full capacity, operating on 16 hours. And we will still have, this is we are looking at almost a 45,000 square feet construction for this kind of capacity. Plus, we will, for further growth, once these capacities are saturated, so we will have another 25,000 square feet to further enhance the capacities on the new unit. On the existing unit, we have a capacity of around 450 metric tons per month. With the veg unit moving out, it's not a very substantial large veg unit what we have now as of now. It's a small 6,000 square feet veg unit. So yes, we will look at an additional 70 to 75 tons per month of capacity coming in for the non-veg unit as well.
Thank you. My second question is, what is the process of getting on board a big QSR? I mean, how much time does it take? And could you just explain me the process? What are the checks that they do?
Gaurav, when we look at, we are working with two kind of, customers. Now, one is when we're working with a large QSR, we're working with a Taco Bell or a Burger King or a Subway or a Domino's. The normal checklist is like we get registered with them as vendors, which is obviously we have to meet all their financial statutory compliances also. They have to see the financial strength of the company because the large companies, eyeing a huge growth in the coming years. Then we have to get into a food safety audit with them. I'm talking of a new QSR when we are listing with the new QSR. So the primary focus for them to do is a food safety audit. So once the food safety audit is done, that's the time, we get registered as vendors. We have to meet the food safety requirements as per their international food safety compliances. After that, the product development, process starts. Now, the product development process could last anything from 1 to 3 months, and before the product is approved. So it could be a very quick approval from their side because it's the product is benchmark is both quality, taste, and the pricing of the product, because they already have a benchmark pricing on a product which they want to launch in the market. And so once the product approval is done, then it will take another 1 month for them to do store trials, small store trials, consumer trials. They have to train their teams on the product, how to use the product. So a process would take anything from 1 to 4 months, depending on customer to customer.
Thank you so much, sir. Just final question. So when you expand, what are the major machines that get added? In one of the previous Concall, you had mentioned that refrigeration is one of the bottlenecks. So could you just explain for veg and non-veg, how is the machine procured, or what are the types of machines at least?
So in the previous con call, I would have been talking of spiral freezers, because our veg unit is small, so we don't have spiral freezers. But in the new veg unit, we are mainly, our 60% capacity is going to come from flatbread lines. We're talking of products like naan, tortillas, malabari paratha, and then we're coming out with a very innovative product, which I won't disclose now, which is a flatbread. It has been rated as one of the, the most popular flatbread in the world. So that's going to comprise of almost 60% of the capacity. Then we are going to come up with ready-to-eat products, which will both be in retort and frozen format. So when we say retort, we're talking of something like what Tasty Bite does for exports with rice. So that's what we are targeting. And then we will have the frozen to fry line, which we are already doing in the existing unit. But so we're talking of products like veg patties, veg savory snacks, whatever. But in the new plant, it's going to be a much larger line. And when we talk of refrigeration, so we are, for all these lines, we are coming up with spiral freezers. So when we talk of spiral freezers, so everything, the product gets frozen online. The product comes out of cooking, goes to the spiral freezer and comes out at -18 and we pack it. So that's the kind of setup we're going to have.
Understood, sir. Thank you for the answers. I'll wait and see.
Pleasure talking to you, Gaurav.
Thank you very much. Participants, you may press star and 1 to ask the question. Next question is from the line of Vinayak Pawar, individual investor. Please go ahead.
Good afternoon, everyone, and thank you for the opportunity. My first question is, what is the revenue and profitability guideline for the financial year 24-25?
Sorry, Vinayak, I really couldn't. Your voice is echoing a little. Can you please repeat your question?
Yeah, revenue and profitability guidelines for the financial year 24-25.
So on revenue, we are looking at a 15 to 20% growth in revenue for 24-25. And profitability also should be an improvement of around 10% on the PAT, Vinayak.
Okay. My another question is, what is the capacity of new plant for the veg segment?
The capacity will be around 14 to 15,000 metric tons annually, Vinayak, for the new plant.
Okay.
Yeah.
Okay. My another question is, any plan for retail business penetration?
We are not planning to do it in the chicken, in our existing non-veg business, Vinayakji. But yes, we are coming up with some very innovative products in the new unit, and we are definitely, I won't say for sure, but we are definitely working on, we are coming largely into the, flatbread business in the new plant. Flatbread bole to, we're looking at products like naan, tortillas, and we, over a period of time, we see, a demand growing for these products, with the newer generation coming in, with people not cooking at home, people, looking at these ready-to-eat options with the younger generation coming in. So we are definitely looking at the idea to go B2C in a very small way to begin with, and then slowly expand our footprint in the B2C business with the bread line, with the bread products.
My another question is, what is the status of export plan of Middle East countries, namely Saudi Arabia and UAE?
For the new plant, we are definitely looking at exports, Vinayakji. So that's one of the major areas we will focus on. So even in our financials, what we are planning for the next 3 years ahead, we are looking at budgets to participate in, the Gulf food fairs and other fairs, the trade fairs it's going to be a very big focus for us on the exports. This new plant with such a high capacity is designed and meant to have a very strong focus on exports as well. And not only to Middle East, we would be targeting US and the European markets also.
Okay. My another question is, what is the margin bifurcation for non-veg segment and veg segment as on date, and what is going to be in the coming future?
The margin segment of veg and non-veg is almost the same as of now. But within the new plant, we see a substantial growth in the margin. We've done our research and we've started doing trials. We've done our research on the flatbread margin perspective, what our competitors are doing. We've done surveys and analysis on that. So there's a substantial growth in margin when we're looking at the flatbread business.
My last question is, what is the projected revenue for the projected revenue and net profit combine both the existing facilities and the upcoming plan, say next 3 years, once the new plant operational for next year?
Vinayji, we are by 27, we are projecting to double our revenue.
Okay.
More than double our revenue, and we're looking at a healthy, 25 to 30% growth in the net profit as well, in terms of percentage. Yeah.
Yeah. Thank you. Thank you. Thank you, sir.
Thank you.
Thank you very much. Next question is from the line of Neil Bail from Engine Capital. Please go ahead.
Hi, Mr. Chatha. How are you doing?
I'm good, Neil. How are you?
Good, very nice. So I just like to ask you, the new plant for which we are, beginning our work should be operational by what timeline in your estimate?
Neil, we are very, very, very sure that it should be, the plant should be commissioned by March 25.
So this projection that you gave of about 20% of revenue growth is coming from your existing facility?
It's totally from the existing facility. So the new plant should be up and going in March. We should give it another, 3-4 months for the trials and, the trials on the machines and get the lines in place. Maybe another couple of months to start presenting calling the customers to the plant, develop products for them. So we're taking a 6 months gap, after the plant is commissioned. And so we're looking at a 6-month revenue coming into that plant.
Yeah. So next year, basically you're getting 6 clean months, for
6 clean months, yes. Yes, 6 clean months.
And if your capacity is going up meaningfully, how much would your capacity go up by exactly, from current capacity to when the new plant is operational?
Neil, no, sorry, I didn't understand. We're talking about the new unit?
Yeah, your capacity will go up by how much once your new facility comes up?
Neil, by 27, we plan to touch almost 50% of the installed capacity in the new plant.
No, I meant to say, right now you are in your existing capacity, you're at about 7,000 metric ton. Am I right?
Yeah.
So with this new capacity that you put on board, you're getting up to 15,000 metric ton, approximately?
15,000 metric ton, yeah.
Right. And all of this will be ready by March, right?
By March, yes.
Right. And in the first, you said you'll take about a quarter or so to do the testing, trials, all those things, and you'll get 6 clean months. What kind of a utilization will happen of your new capacity?
The first year, that's what I'm saying. The first year should be around 30-35%. Second year, we're targeting around 65%.
Okay.
So 25, 26 is around 30-35%. Because, it will take a little bit of time for us to, get the customers on board, start delivering the products. So we're not looking at a very large capacity utilization. So it will be a 30-35% utilization. And then next year, yes, we're targeting almost 60-65% capacity utilization.
And this new expansion is largely in vegetarian products. And this is
totally vegetarian.
And you said in the call earlier that the margins are significantly higher. So what is the kind of a margin differential that you see in the new plant versus your existing plant of non-veg?
We see a good, when we talk of operating margin, we see a good difference of around 13 to 14% on the operating profit in the new plant.
13 to 14 percentage points.
13 to 14% increase from the existing operating gross profits.
So in terms of a PAT profile, I think your current PAT profile is PAT margin is like 5 to 6%. So this would end up being what kind of a PAT margin?
Neil, by if I'm not wrong, by 28, 29, we should double the PAT.
In terms of margin?
In terms of margin, yes.
So like a 10 to 11% PAT margin?
Yes, exactly, yes.
Okay. So basically significantly higher margin than our current.
It's a significantly. So it's two. One, what we see is the margins are significantly higher in this, if I say the grain and the bread trade, the margins are significantly higher. And then we're looking at the export market as well, where the margins are definitely much better than selling it in the Indian QSR, where you are always hard pressed for margins. So exports has a much better margin.
So, sir, if we are counting this existing plant and the new plant, it is 15,000 metric tons basically. What would be the peak revenue capacity of both these plants whenever you achieve maximum utilization levels? At that maximum number, what could be the revenue number that we can achieve as a company?
It'll be three times plus of our 24 revenue.
The 24 revenue, if memory serves right, about 140, 150 crores?
24 was 133.
133?
133.
3x of 133. So something
3x
like
of 133.
400 crores approximately is the maximum revenue.
Yeah. Yes.
With like a 10-11% kind of a PAT number is what we can achieve at that point.
Yes.
And sir, then if that's the case, and if this happens in next 3 years, when can we go for the next round of capacity expansion? At what point do you think it will be right for the company to do that?
Neil, I think for chicken, the way things are moving now, we might have to look at a capacity expansion in 26.
Next year?
Next to next year. 24, 25, 26, we will need a capacity expansion in chicken with the way the trend is going on now.
And for the bakery and the vegetarian kind of items, when would you like to go for the capacity expansion there?
I think in the year 28, 29.
Okay.
And capacity expansions could come in earlier, because we're going in with a lot of varied products. We have developed some very, I won't, because the product is still to be launched, so I will not talk about the product or the customer we are supplying it to, a very large customer. And we have developed a very, very innovative product, which is as a bakery product, as a dessert bakery product. It's going to be launched on the 22nd of, this month, July. So if these kind of products we are able to develop, we might have to go into for some additional expansions even earlier if these kind of products take off in the veg section.
Exactly. So I'm pretty sure you must be having a sense of how the industry is shaping up. Where do you think we have the maximum, as a sector? Would you like to grow further, more or less in the vegetarian segment around the bakery side itself, or do you think some other areas where we will grow beyond? So this is the first level of expansion I understood, which you just mentioned. What do you think the company can achieve over time? Keep on expanding in the bakery segment, you think?
We'll keep on expanding in the bakery and the chicken section. Bakery is huge. I still feel we have a long way to go in bakery in India. We have a long way to go in bakery in India at an industrial level. Bakery at a small level, at a store level is okay, but bakery has to go a long way in the at the industrial level. And there's so much you can do in bakery.
This is largely around breads, largely. Naan.
We are starting as breads, but like I said, what we've developed, one of our large customers, goes much beyond bread, goes in as a dessert, as a frozen dessert. So it could move from breads to frozen desserts also.
All right. And also other things like tortilla and stuff like that.
That is all covered in breads, Anil. That is all covered in breads.
That's all covered in bread itself.
That's all covered in breads, yes.
Wonderful. So this is all I wanted to know as to how the company's future may look beyond our existing expansion plans that we have in mind. So you're saying that there is far more room to expand further. I mean, the industry is big enough for us to keep on expanding as we keep going on higher utilization levels.
Yes.
Okay. Wonderful. That's all from my side, sir. Thank you.
Thanks, Anil. Thank you so much.
Thank you. Next question is from the line of Nirvana La from Badrinath Family Office. Please go ahead.
Hi, sir. Good afternoon. Am I audible?
Yes,
you're audible.
Yeah, thanks. So basically, my first question is around the strategy for our new veg line. So I've heard you talk about multiple things, like there's bakery and there's, vegetables itself. Then there's, our own brand sales versus large QSR that we're already doing. Versus we've also talked about independent QSR, as in the small QSR case.
Yes.
And then you talked about exports also. So basically on these 2-3 dimensions, if you can help us understand what is your strategy with the new veg line of 15,000 metric ton capacity, like bakery versus vegetables, and then on these different customer segments, and then exports, like what percentage of top line or capacity are you targeting for which segment, and what is your priority?
Sir, our priority to begin with, when we talk of a bakery line is something which when we talk of breads also, it's kind of a bakery product only. So when we talk about the customer base, yes, exports is one customer, is one segment. Large QSR is another segment. Small QSR, standalone. I would say standalone, but yes, small QSR, casual dining restaurants, flight kitchens, they're all another segment what we're looking at. And then we are looking at the own brand sales also in the domestic market. So strategy, sir, mainly for the large QSR, there is a huge demand for breads, certain kind of breads which we are developing, which we propose to start producing. So there already is a huge demand. We are already in dialogue with the customers. We have already started product development. So we are already very deeply rooted with all the large QSR. We know what's the demand. We know what's going to be their future demand. We're already in discussion with them. So that is good. It is going to be the same strategy as what we have for chicken, approaching them with products or designing or developing products for them as per their requirement. For exports, it's not going to be our own brand sales. For exports, it will mainly be a white label kind of a business we want to do. We have no plans as of now to go into our own brand sales for exports. So it will mainly be contacting the large overseas retail hypermarkets for the private label. It will be participating in fairs, the large fairs like Anuga, like Gulf Food or other fairs all over the world, to be able to do white label for large customers. And for the small QSR, our sales team is already in place. Our distribution network, we are already expanding. We are getting inputs, data, pricing, structures, requirements from our sales team, how it works. So by the time we hit the new plant, I think we should be present in at least 60 to 70 cities with distributors for the large and the small QSR. For the B2C, for our own brand, we are still toying with the idea. We are still trying to understand the market. We are definitely interested in going into the B2C market for the flatbread product, because in the coming times we do see a lot of demand growing in this segment. It is already there at a very nascent stage, but over a period of time, we see a huge demand coming in for these flatbread products, because cooking at home in metro cities, even in a city like Chandigarh, is really diminishing. Domestic help availability is decreasing. Domestic help cost is growing. The delivery pattern is becoming very popular. So that's how we plan to do it, if I'm able to answer your question.
Right, sir. Got it. So you mentioned that 15,000 ton capacity and about 60% utilization is what you're looking at in 2 years. So by FY'26.
In 2 years.
So if I look at your current
FY'26, 26, 27. So 24, 25, 26, 25, 26. Yes.
Yes. So FY'26 is what you said. Like last year will be around 35%. Second year you're hoping to reach around 60%.
Yes.
So if I look at current veg realization, that's about 220 rupees a kilo. So if I put that number on a 15,000 ton and 60% utilization, that's about 200 crores. So is this number accurate, or because of bakery is this number changing?
Sorry, sir. Your voice is echoing a little, sir. I mean, some things I'm not able to make out. Hello?
Yeah. Am I on?
You're audible, sir, but your voice echoes a little. Some part of your questions I'm missing.
Hello.
Nirvana, can you
Sir, am I audible now?
Yes, yes.
Yes, now you're better. Now it's better, sir. It's better.
Yeah. Sir, my question was, you said on a 15,000 ton capacity and
Yeah.
60% capacity utilization, if I basically apply your current realizations in the veg segment, which is around 220 rupees a kilo, so the total revenue from the new plant seems to be around 200 crores. Is that assumption correct? Or because
No,
you're introducing
no.
bakery, are those numbers changing significantly?
The numbers are changing, sir. The per unit sale. So the per unit sale on the bread is going to be much lower. The per kg sale is going to be much lower. Then we're going into the ready-to-eat section, where we are already in dialogue with a few customers for retort rice to the US. That is also much lower. So these numbers are averaging between 90 to 115 rupees per kilo.
Okay. Okay. And so on an average,
the 221 is, yes, that business will also be there. But then there is a substantial amount of business which is coming in as a 95 to 115 rupees. Like a naan would be like 135, a tortilla would be like 90 rupees a kg. So we are ranging in that also, and that is quite a large. We're looking at a 50-60% capacity from coming in from these breads.
Got it. And the remaining would be from the existing 220 rupees per kilo kind of vegetable product.
Sir, it would be slightly lower again there, but when we're looking at 220, we're looking at a lot of plant-based products also, what we were doing, like the ones we were supplying to, Blue Tribe and Shakahari. But sadly, their volumes are not growing. And once we put up a large frozen to fryer line, so we will go in for products like aloo patty with Burger King or some other customers. So, I mean, that ratio will also come down slightly.
Got it. So can you help me with what the average realization will be for this 15,000 ton plant? Around like 120, 125 or?
It will be slightly more than that, sir.
Okay. Okay. And what kind of margins are you expecting to make on this plant? So currently your overall margins, EBITDA margins are around 9%. So will the margins be higher here?
Substantially higher, sir. Substantially higher because one, it's going to be a very large volume-based production instead of a batch production, what we're doing in the chicken line now. So it's going to be a line volume-based production. We are very sure we will be lower on manpower utilization as well as compared to a chicken plant, a non-veg plant. And secondly, as per our industry surveys, we have done competition analysis and what is selling in the market now. The margins are way higher than what we are doing as of now in chicken. So the margins in the bread line are substantially higher than what we are doing now.
So just to get an idea,
So even if we do a price war, even then the margins are substantially higher.
Okay, so just to get an idea, so would they be like 15% compared to the 9% we do right now?
Close to that, sir, yes.
Okay, got it. And so we recently, basically we were doing some industry research and we found out that one of your largest customers in the pizza segment, they have actually gone in-house in their, the meat sourcing in South India. So they have actually replaced the vendor and they are now doing it in-house. So how do you see that from your existing business perspective? Is that something that the industry or that particular customer is moving towards and therefore, is also a threat for us in the north?
Sir, that has been, I don't know when they declared it, but they have done it from the last financial year. It's been almost 7 to 8 months or maybe 9 months. They have been, producing some of the products from their Bangalore unit. But simultaneously, the volumes are also growing. So the north and the east business, plus a lot of other products for which they don't have the capability, are still with us and they will remain with us. Plus, we are also simultaneously developing a lot of new products. So this was Setting up the facility was, before they set up or in the process of setting up, it was very openly discussed with us. The business strategy was very openly discussed with us. So I don't see it as a like a, yes, our business might not grow with Domino's or our existing customer, but the business will sustain. It will sustain. It will be a sustainable business.
Okay. Got it. And final question, sir, from my side. So, what we have understood in the industry is that, in terms of, say, topping suppliers or finished product suppliers like Chatha, there are two kinds of vendors, one who are able to be very agile and sort of serve whatever the NPD team of the QSR is, designing. They are able to collaborate with them and deliver that product. And the second is a company that is innovating on its own, on new SKUs and maybe bringing those to QSRs or selling them under their own brand. So from whatever we have understood, Chatha's DNA seems to be on the former side, where we prefer the QSR to innovate and we are very good at execution. So do you feel that needs to change for us to grow going forward? And are we therefore taking any steps in building our own NPD team? What kind of, hiring are we doing there? And in the new plant, are we going to sort of see more NPD driven by Chatha?
In a new plant, it's going to be more of the latter, sir. It's going to be more. Even now, we have shifted gears. Even now, we have really started innovating on products. We will, in another month and a half time, we have developed some very innovative products for a few of our customers. We will disclose them once those products are successfully launched. So in own brands, that QSR doesn't buy, in brands. So mainly, like even we supply, so it's mainly manufactured by Chatha Foods. It's an institutional pack. Companies like McCain's, who are world leaders, who are very large, obviously, yes, they do supply products which they don't really, develop for customers, and we call them the picking up off-the-shelf products. But majority of the companies, if what I am aware, majority of the business from all the vendors is designed on the way the NPD team, because it is not, when the NPD team is working in QSR, it is not only developing a product, it's got a lot to do with what marketing wants, what price marketing wants to sell up. So it is even the QSR is coming back a long way from consumer preference to consumer price preference to product development and then to getting it developed. So it is primarily going to stay this way. But yes, in the new plant, we would be looking at developing a lot of new products and showcasing them to QSR. Because as of now in chicken, it's just one raw material we have, so there is not much scope of showcasing. I hope you understand. Hello?
Yeah, sure, sir. Can you?
But when we go into the vegetarian segment, your source of raw material changes. The kind of products you can showcase, is much larger. You can go from dairy products to dessert products to bakery products. So in chicken, there is a limitation on showcasing because your primary raw material remains just the same.
Sure. And sir, final question from my side. We decided to go into vegetarian just a year or so back, and now in a big way it seems, right? So was funds the only constraint, and therefore we were waiting for this kind of an IPO to happen before we ventured, or was there any other reason that we did not venture into veg before?
No, so we did not venture into it before because we wanted to, but then we were shaping up very well on a chicken business before COVID hit us, and we would have gone into this veg. It was always on our mind. We would have gone into it earlier. But then COVID came on, business dropped, and so we thought that it's better to start out with a small facility, do test markets, see how the customer responds, one. Secondly, the major interest, sir, was exports. So we set up the veg unit, we spoke to customers, but exporting just one line of products does not work. Like we just had the side snacks or the finger food option with us as of now. Once we thought we'll do export, we did a lot of research. Breads came in as a winner for exports. Retort rice came in as a winner. So the thought was always there, but we just wanted to go slowly into it and, before we go into a large investment.
Got it, sir. Thank you so much for your patient answers. I'll get back on the queue for more questions.
Thank you. Thank you so much.
Thank you. Next question is from the line of Pawan Kumar from Shade Capital. Please go ahead. Pawan Kumar, may I request to unmute your line and go ahead with the question, please? Pawan Kumar, if you can hear us. Due to no response, we move on to the next participant. Next question is from the line of Agastya Dave from CEO Capital. Please go ahead.
Thank you very much for the opportunity. Am I audible?
Yes, you're audible, sir.
Thank you very much, sir. You've answered most of the questions. I just had one question on what happens to your fixed cost after this expansion. You mentioned that the labor productivity would be much higher. Could you quantify that? Your capacities are growing up massively, so the current employee base is around 12.5 crores. How does that grow?
What I was saying was that in chicken, in our current business of non-vegetarian, so we are more, this industry in India is more of a batch process, kind of a production.
Yeah.
Yeah.
Now you're going into more mass production. So
now we are going into more line production, sir, where the most of the production is automized and it's a line production. Less involvement of manpower.
Which is your wage bill from 12.5 crores, does it go to 50 crores? Or does it go to 30 crores? Or does it go to 25 crores? I mean, how much do you need to add? You still need people, right? Because it's a brand new plant.
Sorry, sir, I didn't get a question. From 4 crores?
So as of now, you are doing a 12.5 crores in employee costs. So you're adding such a huge capacity, you're tripling your capacity, right? In terms of sheer volumes. But
Yeah.
I understand that the new capacity will be much more automated in nature. So I'm just trying to understand the fixed costs. How do they move? Will you need to double your employee strength, or a 50% increase will be more than enough? What happens to your employee costs? Because that's a substantial cost, right?
If you look at the labor, I think it will be a close to a 50% increase in the manpower, not more than that.
At full utilization, sir. At full utilization.
At full utilization, yes.
Okay. Sir, my second question, I'm not very familiar with your company because obviously you're very recently listed, and I don't have all the past financials.
Sure.
Based on what I could get from the DRHP, I was just wondering, how do you tolerate the volatility in chicken prices? What's your arrangement with your clients?
The volatility in chicken prices?
Yes.
We are normally on majority of our sourcing, we are working on annual prices. Majority of our sourcing. Like 70% of our chicken purchase is done on annual pricing. Our pricing with customers is also annual. So we just left with 20 to 30%, purchase on chicken, which we normally do on a monthly basis.
Okay.
So it is all hedged. I mean, it's all our pricing will always. So we are not buying on a daily base prices of live chicken or the way the live market goes. So our purchases, most of the times, or majority of our purchase is done on annual basis.
So historically, have you ever had the issue with do you get squeezed on either side? For example, if the chicken prices are spiking, but you have an annual pricing agreement with your customers, so they will say, come after 1 year. Is there a lag in passing on the prices?
There have been a few incidents where our customers have fully supported us. See, if we can, it's very simple, sir. If we can genuinely see, the chicken market is a public news. Everybody tracks it. Everybody can track it, right? It's available on apps. It's available everywhere. So there have been incidents where our customers have wholeheartedly supported us. But yes, the pricing it has to be justifiable that, okay, this price is going to sustain for the next 5-6 months. Otherwise, chicken prices, volatility on a weekly basis or a daily basis is something we cannot go to them every day or every week or every month, for a price change. But yes, if some maize prices or soya prices have gone up, or the DOC prices, or there's some disruption in the supply chain, some disease coming in the hatcheries, and where we have been able to convince them that the chicken prices are going to remain like this 4 to 5 months. So there has been an arrangement. Till the time the prices are high, we will give you the support, and the prices come back, we will come back to the original price. So these incidents have happened. Yeah.
Right. So, on the CapEx side, the DRHP had mentioned around 30 crores for the new facility. So I was again wondering, it was also talking about approximately 29 metric tons per day capacity for the new plant. So this one seems to be slightly bigger than that. So are you revising the CapEx, capital expenditure?
Yes, we are slightly revising the capital expenditure, and we'll be using our own internal accruals and bank finance to fund it.
So would it be closer to 40 crores, sir?
It will be close to 38 crores, sir.
38 crores. Okay.
Yeah.
But not much. Okay.
Not much.
Yeah.
We wanted to increase the capacities. We are talking to our customers where the demand is quite high, one. And secondly, we've had a customer come in the earlier project, retorted rice, the boiled rice at shelf-stable boiled rice was not in the picture. But we had a customer who come to us who has a huge demand for boiled rice. It is something what other people also do in India. So that is one line which we have added, which is a substantial increase in the volume also.
Got it. And so when you set up a new plant, how fungible is it? Are they very highly specialized equipment that you go for? I guess the refrigeration unit would be more or less the same. There will be common utilities, but what percentage of the machinery is extremely specialized?
This time everything is special. The utilities are common. So this time, to be very honest, it's very special for us because we're moving from a chicken unit to a totally bread lines. But yes, all these lines are very, I wouldn't say they're very special or they're very unique, but different for us, and slightly different from a batch process to a continuous belt process or a continuous line kind of a process. But nothing, really what the world is not using or others are not using in India. Utilities are common, yes. The refrigeration, from what we have now, what we call as a blast freezing process, we are moving into the spiral freezing or the IQF process.
Right.
Yeah.
Right. And just to ensure that I got the timelines right, you are starting the plant now. The construction is starting now. You will finish by March.
Yes.
6 months of testing plus getting approvals. So we
Yes.
are approaching September of next year.
Yes.
Which is CY'25. Then you get 6 months of FY'26 when the production is initially starting. Then
Yes.
27 you get around 65% utilization.
Yes.
As you ramp up.
Yes.
And
yes.
before that, you will, going by the trends, you may have to go for another round of expansion in the non-veg unit.
Yes. As the trend is on the demand, we might have to increase our chicken capacities. Yes.
Would you go for a similar scale of increase from 5,500 tons to 15,000, or would it be slightly smaller?
It's too early to predict that.
I got it, sir.
Yeah.
Thank you very much, sir. All the best.
Thank you so much.
Thank you. Next follow-up question is from the line of Gaurav from Excellence Research. Please go ahead.
Hi, sir. Am I audible?
Yes, you are, sir.
Yes, sir. So I had a question, in case there is some chicken-related disease, epidemic disease, flu and all, what is the general strategy for you? Especially, expecting that you're
to be
sourcing
very
is
honest,
none from a same region.
Hello?
Yeah, can you hear me?
Yes, now I can. Your voice was disrupted for a minute. Now I can hear you. So see, if there is a widespread pandemic, like we had COVID in chicken, I mean, there's nothing much you can do about it. But regional flus do keep coming and going. I think region-based flus, bird flus as we call them, or influenza, avian influenza, it keeps coming and going every year. So, I mean, it is almost coming region-based. It becomes a pan-India kind of a pandemic, sir. I don't think we can have any backups for that.
Understood. Yeah, thank you.
Thank you. Next follow-up question is from the line of Nirvana Laha from Badrinath Family Office. Please go ahead.
Yeah, thanks for the opportunity again, sir. Sir, if I look at your history from March 2019 to March 2022, for these 4 years, our revenues actually degrew and then sort of they remained flat for 4 years. And then for the last 2 years, we've been seeing good growth. So if you can tell us what happened during those 4 years and why are we seeing growth again?
Sir, it was COVID. These were the COVID years.
Okay. So even the degrowth from March 2019 to 2020 also, I mean, we degrew a little bit. So that was pre-COVID. So any particular reason for that, or that is normal in this business to not grow year on year?
To grow year on year, sir? Sorry?
No, sir. I meant even before COVID. So in March 2019, our revenues were about 90 crores. In March 2020, we were at around 85 crores. So we were flattish even in that year. So that was pre-COVID. So that was just like, I mean, nothing special in happened in that year, and that was part of normal business.
So there was nothing special. No. I really am not able to recall that period, to be very honest. What was the reason? I mean, if I could, think about it and go back to why it happened, I can personally, get in touch with you and explain that. But as of now, I really don't have the right reason for it to fix it. It's almost been 6 years on that.
Sure.
After that, it was purely COVID, and because during COVID, practically all the QSRs were shut down. Took a long while for them to recover.
Understood, sir. And I missed one answer that you gave to a previous participant who was asking that our capacity is becoming 3x. How is our fixed cost going to go up? I missed your answer to that.
So the fixed cost is not going to go up substantially. We were talking about the labor involvement there, labor cost there.
Yeah.
So, the answer was that our labor cost will go by 50 to 60%, sir, from our current. I won't say the labor cost. I would say the labor demand. Like if we have 100 people now, it could be 50, 60 people for the new plant because that plant is mostly automatic. Labor cost is slightly difficult to say because the minimum labor wage and everything keeps changing. So the manpower requirement is what we're talking about.
Sure. At peak capacity for the new plant, the incremental demand will only be 50-60%, you're saying? 60%,
yes. 50 to 60%, yes.
Okay. And in terms of depreciation, sir, so this 38 crores, if it's possible for you to give us some idea of over how many years this capitalization will be depreciated?
Mr. Wali, are you there? Can you answer that question, please?
Yes, sir. So it will be normally on the 15 years and building would be for 30 years. The plant and machinery it is 15 years and for building it is 30 years.
Okay. And how much of the 38 crores is building?
Building is around 6.5 crores.
And all the rest is plant and machinery?
No, it's 4.5 crores is land and the rest is machinery and some utilities also.
Plant, machinery and utilities. Yeah. So basically plant and machinery. So basically plant, machinery and the supporting utilities.
Sure.
The boilers, the generators, yeah.
Got it, sir. Thank you so much and wish you all the very best.
Thank you, Gaurav. Thank you so much.
Thank you. Participants kindly restrict to 2 questions per participant. Next follow-up question is from the line of Dharmal Shah, individual investor. Please go ahead.
Hi, sir. Thank you for this opportunity. More on the customer concentration.
Dharmal, sorry to interrupt you. Can you speak through the handset, please?
Just a sec. Yeah, is it audible now?
Thank you. Yes.
Much better.
Yeah. So my question is more on customer concentration. If we look at your PPT, almost 75 to 80% is from two customers.
Yeah.
From a risk management perspective, I mean, how do we try to assess this customer concentration? Because much of our performance would be dependent upon how their performance would be.
So you're absolutely right. But next year, you will see, and even now, the customer concentration is much widespread now. We have acquired new customers. We have acquired new businesses. So the customer concentration is not up to 80% now. There's a lot of reduction in that percentage.
Okay.
Yeah.
But 3 to 4 years down the line, how much the top two customers would come down to around?
They are down by almost as of now, as I speak on today, they are down by almost 20%.
Okay, got it. And another follow-up question. Usually QSR industry is growing very fast, but there is a very high attrition within the industry as well. So even if we onboard our new customers, how do we get those would be our long-lasting relationships?
Sir, to be very honest, all our relationships have been very long-lasting. All our relationships have been very long-lasting.
Got it.
Yeah.
Got it. And just a follow-up questions from one of the previous participants. How does the pricing work with our top two customers? Is it, annually?
Yes, it is annual.
Contracts or?
Yes, it is annual. Well? It is annual, sir.
Good. And what would be our wallet share with these two customers broadly?
Sorry, sir. What would be?
How much would the Chatha Foods account for their meat procurement?
Sir, I really won't be sure. But I think with Subway, we should be at above 80%. With Domino's, we should be close to 65%.
Got it. And the remaining 35 and 20% for both the companies, is it their in-house processing or are there any companies?
No, sir. You see, Domino's is in-house. They recently started it. But as you would know, that these companies, all the customers are very large customers, spreading at a very fast pace, growing at a very fast pace, large number of stores, large number of customer base. So that is something I totally agree with our customers and these companies that, a single vendor dependency is not good for them to have. So obviously they have to do their risk management, which is very well accepted by us.
Got it. So just to, if you can name few of them, are there any companies in India which are, similar of your size or maybe?
So there are companies, there is Darshan Foods, there is Vista, they're much larger. Venky's is much larger than us. CP is much larger than us. In terms of companies as whole, they're much larger companies than us. Darshan Foods is our size. Republic of Chicken is our size.
Got it.
Yeah.
Thank you. Next question is from the line of Pawan Kumar from Shade Capital. Please go ahead.
Sir, I'm audible. Can you hear me?
Pawan, your voice is breaking. Can you speak through the handset, please?
Yeah, is it clear now?
Yeah, please go ahead.
Yes. Can you give some sense of your export market, like what sort of targets you have, maybe some color on this, maybe next 2-3 years, what sort of percentage revenue you'll be getting from export market?
Sir, I can't comment on that. I really can't comment on that as of now. The plant has to come up, the product has to come up, so it's a little difficult for me to comment on it as of now, sir.
And when we'll start seeing like this orders showing up, maybe this year, or like what is the timelines for this?
No, sir. This year the plant only will come up. By next year March, the new plant only will come up. So then after that, we're looking at a good 6 months timeline. So once the plant is commissioned, we'll have to do trials. We'll have to run the products on the line. We'll have to standardize the products. So we are looking at by after September next year, sir.
Okay. And so secondly, for this plant-based meat products, can you give some color what sort of market scenario you are looking into? What sort of opportunity in this particular segment?
So plant-based meat products in India are not taking off, but exports, yes, there is a demand coming in. Some of our customers also, whom we are supplying to, are exporting. So the European market is growing, not at a very, very fast pace as it was expected to grow, in 2021 or 2020 or before that. But the market is definitely growing in the European markets and in the England market. So we plan to target that market once a new facility comes up. But if we talk about it in India, there is not a very huge demand coming in. It is quite a low demand coming in as of now.
Okay, sir. These are my questions. Thank you. Thank you and all the best.
Thank you.
Thank you very much. As there are no further questions, I'll now hand the conference back to Ms. Priyanka Oberoi for closing comments.
Thank you. Thank you all for joining us today. As we concluded this conference call, making the financial year result 2024, I would like to take a minute on the behalf of Chatha Food Limited to express my gratitude to each of you for your active participation, insightful contribution throughout our discussion today. We are always grateful for the continued support and trust for our investors, our clients, and our team members. Together, we have the strength to overcome the challenges and seize opportunity in the month ahead. Thank you all for your ongoing dedication and unwavering support. Let us make this conference call a productive session, setting the stage for the strong finish to the financial year 2024. Over to you, Nirav.
Thank you very much. On behalf of Chatha Foods Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you, Neerav.
Thank you.
Thank you.